You Henry. Buy U.S. stocks, buy the dollar, and buy Japan. Well, there he is at nearly 1,000 views. He's by far my most popular video. I've got like 8-9% of all my views since I've been doing my channel from Hugh Hendry. One thing. Hugh Hendry, manager of hedge fund Electrica Asset Management, is out with his first quarter investment letter. Value Walk has obtained a copy. So you can go to this article on Business Insider, where I get a lot of my stuff. I'm going to skip down. Here's Hendry first on U.S. equities, then the dollar. An unresolved but pertinent question is whether the price action might mark the start of the next asset bubble. Consider the plight of the conservative investor, concerned about the risk of the global economy and hence cyclical equities, fearful of financial repression in treasuries, trapped, possibly unfairly, by the prejudice of the 10-year bear market in U.S. dollars, scared that governments may have to haircut his savings account in the bank, and now terrified by the sudden price collapse in gold. It could be argued, for such an investor, all roads lead to the safest, least volatile, most liquid consumer non-discretionary blue chips on Wall Street, which provide a 3% dividend income payable in U.S. dollars. The second of our major investment themes is the likely durability of the U.S. economy relative to the rest of the world, and the impact this may have on the U.S. dollar. Unlike the rest of the world, America has dealt with the overhang of bad debts from the housing bubble through a vicious housing price correction and the resulting burst and the recapitalization of its banking system. Wages have come down sharply relative to Asia. The shale gas boom means energy is now far cheaper as well, and the resulting lower cost base is allowing the U.S. to reclaim market share within the global economy. As such, U.S. real GDP is 3.3% above the pre-crisis high of Q2 2008, whereas the European economy is still languishing 3.1 below its all-time high recorded in Q1 2008. Perhaps more interesting was another break with the recent tradition, as the U.S. dollar proves less negatively correlated to the performance of the stock market. Hendry continues. It is early to draw anything from this, but the sight of the stock market and the dollar rising in tandem looks like the regime which accompanied the last $2 bull markets from 1980 to 1985 and 1995 to 2001. Click here to see the full letter. Okay, we're not going to see the full letter. Okay, first let's look at the dollar. That's the dollar. This goes back. What is this? That's only a few months. Let's give it the 3 years. Okay, there's the dollar, which it's recently up. If you looked at the chart in the last few months, it's gone up. So from here, which if we go back to April 2011, the dollar is up from 74 to 84. So yeah, that's up like 8%. So that's 8%. So the dollar is very strong. It's going strong. It's still in the same. It's still trading in the same pattern. It hasn't broken out. It needs to break out past 90 to get out of wherever it's in, but it's still in that same pattern. Okay, so there's the dollar. Now I just have a couple of ideas. The first one is if you believe in the U.S. market, if you believe what he's talking about, I would go ahead and buy the QQQs, which is the NASDAQ 100s, which the NASDAQ 100 is doubled since the famous bottom, since the 666 down here that Mark Farber always likes to talk about. They were at 42. So if you'd have bought them at 42, you would have almost doubled your money from there when the market bottom. The famous market bottom in April of, 2010? So you've doubled since then. So I definitely think the NASDAQ 100 is a good place to go. The other one, this is a John Bollinger stock that he advised on buying, what, 12, 13 years ago. It pays a 1% dividend, and look how much it's moved. This is the Japanese Small Capitalization Fund, JOF. It's a closed fund, but look how it's performed. That is since November. In November, you got a 50% return, and it's very strong. It's stayed above. It's barely even moved. It's barely moved out below the 20-day moving average. So yeah, it is extremely strong. So if you like Japan, you'd buy that. Let's look at one other. So anyway, yeah, those are a couple of ideas. Hugh Hendry's a very sharp guy. Bye-bye.